Are you investing in the stock market yet? 2025 might be poised to be the best time to get back into the market, and that's exactly what we're going to be breaking down in today's video. So when we think of a lot of people that sidelined a lot of cash because of course the last 2 years we have seen double-digit growth in a majority of the S&P 500, and really this year is giving it and really poised to be a place where it could be a little bit more stagnation, maybe not such a big driven economy that we see within the US itself. This could be the great year again with the run up of stocks that we've seen since 2023. Wall Street has really seen it chugged higher, driven by artificial intelligence, driven by a lot of these mega cap companies that we see. Now, overall, it looks like this is a very good opportunity zone. According to Wells Fargo, the bank is seeing the S&P 500 ending the year roughly 6,500 to 6,700, meaning that we could see as much as that 13% increase. And of course, if you're not willing to get in the market this year, the last couple years have been incredibly difficult. Now, when it starts struggling and when you start thinking of the pullbacks and the reallocation of some of the cash, we're starting to see that rates are coming down a little bit, which means, of course, that CD rates are going to come down. We're going to see those high yield savings rates come down, which of course means a lot of money that is in those assets right now are going to be moving back into shorter term instruments. We could see stocks, we could see a little bit more bonds, and we'll know in the next coming weeks or months how attractive these entry points are. So I know it's not about timing the market, which is virtually impossible, but it could be the point of having some money and wanting to be ready when we do see a little bit of a pullback. A lot of people are doing this exact thing when it comes to Bitcoin. I know they've kind of parked a little bit of money aside to see exactly when Trump takes the presidency, what it's going to look like, what the inflation data is going to look like. Are really interest rates going to stay higher for longer, like a lot of people are seeing? And are we going to see a market crash? Now, if you remember a couple months ago, we seen an article from Goldman Sachs that said we might only see a 3% if it is high as 3% growth in the S&P 500. Some other companies like Wells Fargo came out and said about a 7%. Some even said 7 to 13%. We've even seen 13 to 20% based on some of the big tech stocks, including to go. Now, the inflation data that we just got on Wednesday, which shows core inflation has come down slightly. That is a good report and a good sign that we could possibly see a little bit of those lower rates, which of course means that we could see 2 or 3 rate cuts this year itself. Now, stocks are still supported by very strong fundamentals, according to Mark Hackett. Now, this is the chief market strategist at Nationwide. There's a lot of people that we really rely on when it comes to the economic data, and it looks like we're really poised to avoid a downturn in 2025 with strong tech gains, and also will continue to support a broader market as we're seeing growth in the economy. Now, market corrections, when we think bigger picture, they are very common. We usually see it. We'll have 1 year, we'll have a second year. If there are 2 consecutive years of double-digit growth, normally within about 18 months, we're due for a little bit of a pullback. If we see a pullback, let's say 5%, 8%, 10%, that is going to be a perfect time to get your money in the market. And again, it's not about timing the market, but it is about the time in the market. When you see a little bit of a dip like that, it's not that the value of the companies or the averages are coming down. It's not that we're seeing disorderly or we're seeing panic driven in the market, but it's really the natural recalibration when you think of the S&P 500. When we see people that are taking profits from record highs, we see the exact same thing again when it comes to cryptocurrency, where when it gets up to about, that 102, 103, 105, a lot of people do sell out that point or even sell a little bit. Even if you had, let's say, a lot in that coin sitting in Bitcoin, you sold out 10%, you kept the rest. Little bit of a market correction over there. Now, of course, when we think of the chief technical strategy, which is Adam Turnquist for LPL Financial. Now, me personally, we do work closely with LPL Financial, that we're also looking for a positive backdrop for stocks despite the recent technical damage in the S&P 500, which of course could look at a little bit of further losses. Now, when he looks at the corporation earning growth and really the enthusiasm of AI, even looking at some of the really big quantum computing companies that have been doing incredibly well, it seems like the growth is there. We could see a lot of growth in the S&P 500 with some of those really large companies. Now, markets are also anticipating pro-growth policies that President-elect Donald Trump are going to be bringing in, despite the risk of some of the agenda that could really stoke inflation, add to the deficit, and put more money on the books itself. He's quoted, overall, the weight of the technical advantage or the evidence suggests that a recent pullback may not be over in its entirety. The silver lining is a deeper drawdown that it could prove the potential buying opportunity for some of these stocks in a bull market. As most important, the S&P remains above its long-term uptrend, with cyclical stocks primarily leading the way. Now, of course, when we start thinking of that, when we think of Apple, when you think of Nvidia, when you start looking at Meta, when you start looking at Google, some of these companies, the price to earnings ratio, a lot of people have said are kind of blown out of proportion because they're not producing enough revenue to really the justification of what the price is. But honestly, Wall Street is generally expecting another positive year for 2025, even after back-to-back years, again, of that 20% growth, over 20% growth within that S&P 500. The average year-end price for the benchmark is 65.38, implying another 8% current gain over the levels, which is pretty cool. So when we start thinking of the S&P 500 in a bigger, really a bigger picture, guys, it is the way to invest. When you think of Warren Buffett talking about the S&P 500, when I share it here, when you start thinking of like the S&P 500 and the Vanguard, the VOO, the Vanguard S&P 500 fund, that is the exact ETF that I have. Now, when we think of a portfolio, I do have a bulk in that portfolio. And the reason being, when we start thinking about a 3-fund ETF portfolio, we have that foundational. That is going to be the S&P 500. When you think of that, it is invested in all of the sectors of the stock market. You have instant diversification when you're investing in something of that nature. Now, the second aspect that I look in here is the tech side. Thinking again of the artificial intelligence, the quantum computing, everything else that we have in the tech sector that is really driving it. That is the second reason why I have my second part into the QQQM. Now that, of course, is the Invesco QQQM. Putting it in there gives me a little bit of exposure and a lot more exposure to the tech side that I know I do have a little bit of overlap with that S&P 500, that ETF that we do have with the VOO. Gives us a little bit of overlap, but gives us the ability to see a little more growth in these up years, and it is done incredibly well. And of course, the third part of that 3 ETF portfolio breaks into the HD or the dividend ETF that we have to really make the combination of it. So what we have, if you think about, again, a portfolio of that nature, we have the HD, which is yielding a pretty good growth, as well as a reliable resource when it comes to dividends. Those dividends get reinvested back into those tech stocks within the QQQM, also reinvested back into that S&P 500, as well as contributions that I'm making on top of there, just starts really supercharging not even the compounding aspect that we see within the growth factor, but also those dividends that are just supercharging the money that we're getting in. Even the portfolio that we're sitting on right now, we're getting about $250 a month in dividends out of that portfolio. When you look, even though they only pay every quarter, when you start breaking it up into a monthly between the investment portfolio, so on a $140,000 investment portfolio, we're getting just north of $200 a month, which is pretty cool to see reinvested every single month on top of the additional funds that we're putting in there. Now, our goal right here, guys, is the debt-free journey, as you can see right here. So if you like the content that I'm putting out, definitely consider subscribing to the channel. Let me know in the comments what you guys think about the S&P 500 and exactly what the stock market's going to do in 2025, and I'll catch you in the next video.